Hey, how you guys doing? Jordan Dove here. Hope everyone's been well. Please excuse my absence the last couple weeks. It's a really busy time of the year for us, and we've just been absolutely slammed. So I got to get you guys a market pulse update. What's going on in the economy? What's going on in the national housing market, as well as what's going on in Las Vegas. Go Knights, go! We got a playoff hockey game tonight. We're 2-1 in the series. Look to make it 3-1 tonight. There's the T-Mobile Arena, right there. They're not playing there tonight. I don't believe. I think they're out of town, but that's where they play. And T-Mobile's always a good time. It's the most expensive ticket in all of hockey. But what do you expect when you're in the sports and entertainment capital of the world? We're also getting the Oakland A's. They bought a plot of 49 acres just west of the strip on Tropicana, where the old Wild West Hotel and Casino used to be. Red Rock Resorts actually owned 46 acres of that land, and the other 3 acres was by another developer. So it looks like the Oakland A's are going to be building a $1 billion retractable stadium on Tropicana, just west of the world famous Las Vegas Strip, and they plan to have that done for the 2027 season. So, Oakland, I'm sorry you guys are losing all of your professional sports franchises. Some of them are coming to Vegas, and I personally welcome them to come here to Las Vegas. I will be buying season tickets. I will get 2 seats. Going to get with a group of friends. We're going to get a whole row, maybe a whole section. Who knows? If you guys want to get seats with us, let us know. Anyways, let's talk about it. We'll start with our quote of the week from Tina Fey, who's an American actress, and she says confidence is 10% work and 90% delusion, and I have to agree with her, all right? So let's get into last week's review. The market slid sideways. Traders have been playing a waiting game ahead of this week because we have a big batch of quarter 1 corporate earnings reports that are coming out this week, and the stocks, they slid sideways with the 3 major indexes ending down just a little bit. There was disappointing data, including the most continuing jobless claims since November 2021, the weakest the weakest Philadelphia Fed manufacturing index since May of 2020, and the lowest leading economic index since November 2020. But we did get some better than expected corporate earnings, the first positive read in 5 months for the Empire State Manufacturing Index, and preliminary April IHS Market Manufacturing and Services PMIs were both showing growth. The week ended with the Dow down 0.2%, the S&P down was down 0.1%, and the Nasdaq down 0.4% to just north of 12,000. Also mimicking stocks, bond prices were a tick off overall, though the UMBS 5.5% ended up 87 cents to $101.11. In Freddie Mac's primary mortgage market survey, the national average 30-year fixed mortgage rate edged up after 5 weeks of declines, but it's important to remember that mortgage rates can be extremely volatile, so stay up to the date by talking to a mortgage professional like Chuck. You can give him a call, guys, for all your mortgage questions. Make sure you check out his channel. He gives some great advice. If you were following, and I've had the pleasure and privilege of being around Chuck for years and working together for years and hearing his knowledge for the years. And if you've been following the rules he had been setting for you over the last year, you would be saving more money, you would have minimized your credit, you'd be up in the sectors that were recommended to you, and you'd be doing a lot better than the overall market. But that's only if you listened and took the advice. Anyways, let's get into our national housing market update. Single family housing starts rose 2.7% in March. That's up for the second month in a row for the first time since 2021. So that means builders are building more single families, which is good because they were pushing a lot of multi-units. So with the drop in the multi-units, overall starts were off a tick, but homes under construction remain near the highest level on record. Now, that backlog of projects, that's telling us why permits fell in March. The National Association of Home Builders Sentiment Index rose for the 4th month, though still less than half of the builders are considering conditions as being good. Now, sales of existing homes cooled in March after they did have a big February surge. The good news for buyers is that the median prices fell 0.9% from March 2022 and are down 12.7, from March 2023 and are down 12.7% from their mid-2022 peak. The inventory of unsold existing homes rose 1% from the prior month to 980,000 at the end of the March, or the equivalent of a 2.6 month supply at the current monthly sales pace. So nationally, we still remain in a low inventory resale housing market because people don't want to trade up their homes with their comfy interest rates that they have at 3%, 2.5%, 4%, and buy something that's less house than they have that actually costs them more than what they already have for less of a house. So that doesn't really make sense. Little did you know study by Zillow found that 2/3 of millennial and Gen Z Americans polled say it's realistic to think they can buy a home in the next 5 years. Looking at our treasury bonds, the 2 year to 4.105%, down a tick today. The 5 year at 3.576, the 10 year at 3.496, and the US 30 year at 3.713. That's down as well today. Let's talk a little bit about Las Vegas. Have picked up, accepted contracts have picked up as we move into the busy time of the year, but inventory continues falling here, and our absorption rate remains elevated at 44.34%. That's up 1.49% from a week ago, and that's an absorption rate based on the past 30 days. There's about 2.25 months of inventory available in the market. Historically, 6 months is considered even. However, I believe, my personal beliefs is that 4 months, with how people move much more quickly now, and they don't, it's more transient. We have these migration patterns. I think 4 months is more of a healthy, even buyers and sellers market. We did see so far this month for April single family homes, and we peaked in May of 2022 at 482,000, and we dipped all the way down to 422.5, but now we're sitting at 425 for March, and now 430 we're seeing for April. Median single family homes, that's up 5,000 from March. So we've been seeing this decline kind of flattening out, and now we're seeing a slight increase, but we'll see the rest of the data here at the end of the month as the majority of homes will close. The median prices are based off of 1,743 sold listings from the MLS. Condos and townhomes remained unchanged. Condos with the median sales price of 225 and townhomes of 320. Those are both unchanged so far from March, but we do have a decrease in inventory. We are down to 5,952 active single family homes, townhomes, condos, high rises, manufactured, and multifamilies that's available. Rentals also dipped month over month. We have 2,991 active rentals on the market. That's a decrease of 2.76% compared to 4 weeks ago. So we've seen week over week decreases in all of our inventory, including land, including rentals, including all of our residential property subtypes. Okay, the past 7 days we've seen an increase of new listings compared to 4 weeks ago. Back on the market has reduced. Increases are starting to pick up just a little bit. Price decreases keep falling, which means we may be reaching that bottom trough there. 984 properties accepted an offer. That's up 16% from the previous month. Last week we had over 1,000 offers accepted, and I haven't seen that number in over a year, so it is good to see that type of health returned. But because there is less inventory with 5,952 properties on the market, we are seeing prices like in single family start to rise up. And there's homes, I have buyers working in that 400 range, 450 range, 350 range, and those homes that are nice and good shape, there are multiple offers going quick. We had a nice townhome that was listed. We had 9 offers within the first 5 days, went for cash. Okay, so that's what's going on in the market. Let's predict what's going to happen this week. New and pending home sales, home prices, and inflation. Forecasts are calling for March new home sales to be slightly off, but for the pending home sales index of signed contracts on existing homes to move up. The S&P Case-Shiller Home Price Index should show price increases leveling off in February. Inflation is expected to continue moderating in March according to PCE prices, which is one of the Fed's favorite measures. Now, our tip of the week is you may want to have an energy efficient home, and inflation has been increasing the cost of goods and services, so it might make sense to look for an energy efficient home. Energy prices rose 41.6% over the last year. Electricity prices rose 13.7% over the last year. Natural gas prices rose 38.4% over the last year. Even though natural gas has come down tremendously, they are still charging premiums for it. So some things you can do to save on energy is use the smart thermostats, efficient air conditioners, insulated windows, whole house fans, radiant barriers, those kind of thing. And there's also tax incentives for clean energy equipment such as rooftop solar, wind energy, geothermal, heat pumps, and battery storage. So if you want to add energy savings features later on, tax credits can provide money to lower the cost of those. So I've been against solar for many, many years. I thought the technology was primitive. A lot of the companies that came out 10 to 15 years ago are out of business or got bought up, so those warranties are not valid anymore. They don't make those parts anymore for those systems. They're hard to find. So I was having some issues with those. Now, after another 10 years or so, I think the technology is getting to a much better place. I still don't think it's where it's going to be in the future. I think it will continue to get better. But with my Nevada energy bill, and yes, I have a pool with, a pump, not a heated pool, but I do have a pool, and the system runs every day as it starts to heat up, and we have two HVAC 5-ton units on the roof. But our power bills typically in the winter, historically, the last several years have been, we get a break, $70, $100, $120. Okay, cool. Because that would offset our summer bills, which would be $500, $600 in the middle of summer when the AC's going and all that good stuff. But I have clients who have solar who are selling properties, and their payments are $96 a month with a $13 connection fee to the Nevada Energy Company. So they're at $100, $115 on a 25-year term. And their bills every month are cheaper than my lowest bill of the year, and I feel like I'm getting swindled here. My gas bill, and we only have one gas company to go to, just like we only have one energy company to go to, that's owned by Warren Buffett, by the way, but we're monopolized here. And my gas bill in February of 2022 was $57, but in February 2023 it was $260. It was $213 last month. So just being price gouged. Leaning towards solar, I think it might be a good move. I still have to think about it some more, but if energy prices keep going up and they don't come down soon, and maybe this is part of their plan, they want everyone to go to clean energy, so they're going to jack up energy prices so more people move to the solar and the clean energy type thing. So let me know what you guys think about that. I'd appreciate it. Now, last thing we're going to finish with is we've been forecasting Federal Reserve policy in the coming months. We've been watching what Wall Street, what their consensus is, and we've been right just about everything the Fed has done. The futures market is seeing the Fed hike 0.25% in May. They're projecting it's going to hold there in June and then cut 0.25% in July back to where we are now. But we will see what happens. There's an 89.1% consensus among the Wall Street banksters that will have a 25 basis point rate hike at May 3rd. It's 92% that will stay there at the June 14th FOMAC meeting, and as 80.1% consensus will remain there as well July 26th. So I hope that's it. That's it, guys. I don't hope that's it. That is it. I hope you're doing well. Go Knights, go. Go support a local business. Shout out to my friends Tom and Josh, who have a couple businesses in town. Seamless Athletics, laser hair removal, tattoo removal, varicose veins, all those good things. Go check them out. Kaya Kumara, insurance agent. She's awesome. Help you with your whole life insurance, all that good stuff. Make sure you guys click the link in the bio or in the description of this video so you guys can get on the email list and receive these emails and these updates. Hope everyone's doing well. Until next time, see you guys.